Welcome to today's market report. European stock markets are set to open largely higher on Tuesday, helped by signs of economic recovery in China, but the UK could underperform after its markets were closed yesterday on Monday. The DAX future contract in Germany traded 0.6% higher, helped by reports that the German government will revise up its forecasts for growth this year when it publishes updates forecasts later. CAC 40 climbed 0.4%, FTSE 100 fell 0.6%. Helping the tone on Tuesday was the news that China's factory activity expanded at the fastest pace in nearly a decade in August, suggesting that the world's second biggest economy and a major export market for Europe's companies could be seeing a durable recovery from the COVID-inspired downturn. The CAC manufacturing Purchasing Managers Index rose to 53.1 last month from July's 52.8, marking the sector's fourth consecutive month of growth and the fastest rate of expansion since January 2011. We maintain our baseline scenario that China's economy will undergo a V-shaped recovery, said analysts at BBVA. That means the GDP growth rate will steadily climb up to 5% in Q3 and 6% year-on-year in Q4, concluding 2020 with a full-year growth outturn of 2.2%. Economic data will be also in focus in Europe on Tuesday, with manufacturing PMI data for the region, German unemployment numbers and Eurozone inflation figures all scheduled. On Wall Street on Monday, the Dow Jones and S&P 500 ended in red on the last day of August, while the Nasdaq rose solidly. The S&P gained more than 7% for the month to notch its best August since 1986, while the Nasdaq posted gains of nearly 10% in what is traditionally a weak month for stock performance. In corporate news, Old Mutual reported Tuesday a net loss for the first half of the year, and the South African-based financial services company suspended its dividend payout due to the pandemic. Lagardere could be also in the spotlight amid a potential legal battle with its two largest shareholders, French media conglomerate Vivendi and activist fund Amber Capital, over boardroom representation. Oil prices pushed higher on Tuesday, helped by weakness in the US dollar, which makes commodities priced in greenback more attractive to overseas buyers. The dollar hit its lowest in more than 2 years early on Tuesday, as investors continue to digest the previous week's policy shift on inflation announced by the Fed. Later on Tuesday today, investors will look to the American Petroleum Institute's figures on U.S. oil supply, with inventories expected to continue to be reduced. U.S. crude future traded 1% higher at $43.02 a barrel, while internet benchmark Brent contract rose 1% to $45.74. Gold futures rose 0.8% to $1,994 per ounce. On the FX front, GBP US dollar approaches 13-year resistance line at 135.22 as the cable gets a warm welcome after returning from the long weekend. The pair rises to 134.10, currently around 134.08, up 0.3% on the day. Commerzbank's Karen Jones expects the pair to hold the initial test of the aforementioned resistance line. The Sun came out with news indicating that the UK Chancellor Rishi Sunak can levy 5p fuel duty during his budget guidelines in November, while most Tories are against the move, considering the coronavirus pandemic. The diplomat justifies the need by spotting the government's heavy spending to combat the deadly disease and the virus programs for public benefits. The Daily Mail's news suggesting today's EU-UK emergency talks in London will keep the pound buyers hopeful. Euro-dollar is trading near two-year highs, targeting 120.15, whilst the dollar index was down 0.3% at 91.860, having earlier reached a two-year low of 91.773. US dollar against the Chinese yuan dropped 0.5% to 6.8161. This is today's market news. Thanks for listening. We'll see you next time.